Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, it's a new year, so I thought I'd talk about 22 trading resolutions for 2022. Now that's going to sound familiar because we talked about this at the beginning of last year. The problem is, do we, and did I, follow all the resolutions? So we'll get to that in just 1 second. Before we do that, we'll talk about a mystery chart. And by the way, I do take requests. And before I forget, Happy New Year, everyone. Looking forward to a fantastic new year. And hopefully, and I know you should never use the word hope in this business, but hopefully we'll do a good job of following these resolutions for next year. Before we hop into all that, if you want the slides from this presentation and a bunch of stuff to keep you busy for a long, long time, get to know me first, as I often say. Go to davelandry.com/StockCharts. And I'll give you the slides, again, from this presentation and every other presentation that I've done for StockCharts. And limited access to members area, market timing course, and a plethora of other stuff, including all three of my books in PDF format. If you do need to reach me, davelandry.com/contact. I also do a webinar each week on Thursdays. And as I often say, if I can't cover something you want covered in this venue, the webinar on Thursdays is a little bit more open-ended. And also register even if the link is old, and that'll get you to the current shows. Now let's talk about the mystery charts and the methodology in action. This week we have a new mystery chart, which we'll revisit in just 1 second. It's had a nice thrust from lows. You can see it kind of bottomed out. It was an IPO. Looks like it was beginning to get its act together. Sometimes IPOs come public and they die out a little bit, and then they begin to get their act together, and they can take off again and go on to make new highs and beyond. This one had a nice little bottom, made a nice thrust for the lows. Remember, we're not buying a bottom. We're waiting for stocks to do what? Go up, and then ideally set up along the way. In this case, we had a nice little pullback. It was a first thrust, a pattern I call a first thrust. And there's also kind of bow tie-ish. And I'll show you a bow tie in just 1 second. Entry was here, stop is down here. Initial profit target is up here. Now, let's get into 22 trading resolutions for 2022. Number 1, I will only take trades when conditions are conducive to my methodology. And there's a caveat there. And the caveat is, unless I think I have the mother of all setups. Let's say the market's headed lower and I have an upside setup, a buy side setup, and I just absolutely love it, even though the market and possibly the sector, representative sector that is, might be headed lower, I'll go ahead and take the setup. Or B, I have a decent looking stock that can trade in lieu of conditions. For instance, it could be a gold stock or some other commodity-related stock or some hot area, maybe lithium or something. That would be kind of commodity-related. That can be hot, not right now, but at times. But other than that, if the market is just chopping around, as you'll see in 1 second, I will not take a setup. The other thing might be a transitional setup that could be leading the market higher. Sometimes you'll have an oil stock, as I'll show you either late in this presentation or the next one, where they go and bottom out for quite a while and then they begin to take off. And the overall market might not be headed higher at that juncture, or maybe the market will eventually catch up with it. But ideally, you want the market to be headed higher, the sector to be headed higher, he tried to say, and the underlying stock also to be headed higher. You want to stack the odds in your favor the best you can, especially if you're a little bit newer to trading. Now, I just grabbed recent S&Ps. Notice that they were selling off back in December, and then they started to rally, but then they came all the way back in. In other words, chopping back and forth. And then they began to take off again. Now, at this point in time, we didn't know they were going to make new highs, but they did, fortunately. And then they began to pull back a little bit from those highs. Now, during most of this entire period, about a month, we did not have one single setup. If you go to www.davelandry.com/archives, you can look at the trading archives, which are just updated, so you can see the fresh archives, and you'll see that we had no setups during this entire period. Why? Well, the market was looking a little iffy. And if you back it up a little bit before that, we probably had some setups that didn't trigger, which we'll talk about in just 1 second. That is, setups that don't trigger, that is. So no trades during this entire period. And then our mystery chart this week is the setup coming into this week. I put this on Friday, the last day of the year. I had a setup coming into this week. Number 2, I will carefully plan all trades ahead of time and then work diligently to follow that plan. Plan thy trade and trade thy plan. Much easier said than done. The good news is for my stocks that are in the trading service, and I'll show you one in just 1 second, that I didn't take, and so far it's getting creamed today. It's absolutely failing miserably, but the fact that it didn't trigger, I didn't actually take the setup. And the reason I'm referencing back to my trading service, not to give you a soft sell, but more importantly is I lay out that plan every single day. And when I look at a setup like the one I'm going to show you in just 1 second, I say to myself, you know, it looks really good. It's beginning to rally. Maybe I'll just jump in before the entry hits. And then I'll get to thinking, it's like, well, Dave, you can't really jump in because you told your people to get in at this level. And on the flip side, maybe I'm already long this stock because it's triggered and we've been in it for a while, kind of like this longer term trend following we've been doing with some of these stocks. And then it begins to sell off and I get kind of bummed out. It's like, you know, I don't feel like losing the money all the way down to the stop. And then I say, well, you know what? That's the plan that I laid out for everyone else. So that's the plan that I'm going to follow. And not all the time, but a lot of times it'll sell off fairly hard. It'll just be a correction. And then that longer term trend will resume. And that's where the real money is. Now, one thing that is an advantage for me is I get to see a lot of bad behavior. And it's a constant reminder to me not to do those same exact things. And oh, by the way, I mentioned my trading service. It's pretty easy for me to follow that because the plan's laid out and I know other people are looking over my shoulder, so to speak. But in my own trading, sometimes trades outside of the service, I could get a little antsy, maybe get in a little early, maybe overstay my welcome, or maybe exit a little early or micromanage. So I don't want to come across like I'm holier than thou, but I do know what the right thing is to do. I can't promise you that I always do it. But with the trading service, in general, I tend to do a really good job of following my own plan. That way, if you guys have any questions about a trade or whatever, I could say, well, I'm still long because the plan was to get long at this level and have a stop at this level, and of course the initial profit target too. Now, I get emails that look like this all the time. I didn't take XYZ. Is it still a buy? Now it's up $2. So I recommend the stock. The next day has a tremendous rally. And then people email, hey, should I have gotten in on that one? Or should I still get in even though it's already up $2? Or ABC hit the stop yesterday. It's selling off even more today. What should I do? And as an extreme example, I've had people email me 6 months later and the stock has already imploded 50% or more and then ask me what to do. And also, as you'll see in 1 second when we talk about waiting for entries, same thing will happen. Somebody will be down 50% of the stock that's going straight down. And I'm like, I didn't recommend that. Why are you asking me? And they're like, yes, you did. And they'll say 6 months ago. And I'll go back and look. It's like, yeah, I recommended it. But it never triggered an entry. I didn't take partial profits on EFG. It's now selling off hard. What should I do? Well, it's kind of darned if you do and darned if you don't at that juncture. Whereas if you just follow the original plan, I know, easier said than done, then your life does get a lot easier because you took those partial profits. Now this is our mystery chart once again. Notice that I updated with today's data and it is absolutely imploded so far, but also notice that it didn't hit the entry just yet. So far, no capital is put into harm's way. I got this text a little while ago, right as I'm getting ready to go live. I bought the mystery chart at the end of the day yesterday. F, and then it ends in K. Must be fire truck, right? It starts with F, it ends in UCK, fire truck. Well, that looks awfully small for fire truck, so maybe it's something else. But anyway, every time something is 40 cents from triggering, it goes nuts, and you pay $1 more if you wait. So his point is, rather than wait for it to get all the way up here, why not buy it when it's like right around here? Looks like it's going to go there and trigger. Well, the reason is because sometimes it won't. Now, as I often preach, trading done properly can be boring. You're either waiting for a setup to trigger, you're either waiting once in a setup for it to go on to hit the initial profit target, or, God forbid, stop out. And in general, you're waiting around a lot, or you're also waiting for it to hit the initial profit target. And some of these things can take a long, long time. Now, we as humans tend to crave excitement, and it's in our nature. And we tend to try to make something happen. We tend to trade for excitement and entertainment when a lot of times there's nothing to do. Now, you can avoid putting yourself into a state of regret by following the well-thought plan. Just like my client who just texted me a few minutes ago, he's dropping F-bombs because things didn't work out. And not to rub salt in his wounds, but had he followed the original plan, he would not have put himself into that state of regret. Now, here's the flip side. The other point that he did point out is when he doesn't get in, he feels like he's giving up too much of that initial move by sitting around and waiting for that entry. So you got to be really careful not to put yourself into a state of regret. Here, I'll give you one to show you I'm not absolutely perfect. I'm 1 penny away from getting stopped out on a intraday trade that I took today. Now, right before I'm going to record, I'm like, that damn thing's going to hit that stop in the middle of this recording. Why don't I just get out now? And I was like, you know what, Dave? Leave it alone. Let the chips fall where they may. Because if it does stop me out, so what? I know, I'll drop an F-bomb, but so what? But if I get out early or earlier than I planned, and the thing takes off without me, I'm also going to be in a state of regret. So very easy to fall into a state of regret trading. And a lot of times you can avoid not all states of regret, believe me, but many of those states of regret by simply following the well-thought plan. Number 3, I will only take trades that trigger an entry. Well, that goes back to the mystery chart this week. It has not triggered just yet, and one of my clients is already in it. Now, Stanley Druckenmiller, I do my own artwork here because I couldn't find a picture of him that was not copyrighted. But anyway, he says, the way to build long-term returns is through preservation of capital in home runs. Now, the home runs, as you'll see in a few minutes, come from picking the best and leaving the rest and following that plan and trailing that stop higher and taking those initial profit targets. And a lot of times you're not doing anything but waiting. Now, one thing that could help you with the preservation of capital, in addition to being super duper duper selective, is to simply wait for an entry. And if you could avoid the occasional spill and quite a few small losing trades by waiting for an entry, then hopefully some of the remaining trades will turn into longer term winners. So I fully agree with Mr. Druckenmiller. So here's our little setup coming into today. It absolutely failed miserably so far, but so far it hasn't triggered. So next, in question mark, I'm going to reevaluate this at the end of the day to see if it goes in tomorrow's service. And so far, I think it will. It's failed miserably so far, but it still looks pretty good. And it still looks like it has potential. Now, this is what I left in from last year, and the entry was up here, and this thing absolutely imploded. And hopefully I'll get an email on this asking me about it. This slide was from last year. It was actually a couple of years back, but it's one that's very, very, very memorable. Maybe that's because somebody did email me when it was about $3 a share after I recommended it at about 23. But fortunately, it did not trigger. So you'd be surprised at how much capital you could preserve by simply waiting for an entry. Number 4, I will pick the best and leave the rest. If a stock looks like an electrocardiogram, you should ignore it. Now, let me show you a couple of stocks that I picked that eventually turned out to work pretty well. This was a TKO. Notice that it was in a longer term uptrend, and in addition to that, there was a gap in the middle of the trend, and the trend had begun to accelerate higher. So this had the makings of a really good looking stock. It also had persistency, meaning that it tends to go up day after day after day. One thing I like to do with persistency is to draw a line through the bars as opposed to a normal trend line, which would go underneath the bars or on top of the bars for downtrends, obviously. But drawing the line through the bars, mathematically, that's equivalent to linear regression. It shows if a market is persisting in its trend. Now, here's one of our big winners from last year, Academy Sports. It was kind of in a gradual uptrend, then it began to accelerate higher, made a nice little pullback, was also an IPO. And in IPOs, sometimes there's a little excitement behind them. And if you play those first pullbacks, that could be a really great pattern to trade. Also, you can look to trade initial breakouts, such as the buy at B pattern. We talked about a lot about that last year. If you can't sleep at night, go in and watch the archives of this show. Just don't watch just don't operate heavy machinery afterwards. Now this would turn into one of our bigger winners, up 129% out of this pattern. CPE was another big winner last year. Notice it was going down forever. There's nothing to do when a stock is going down. It began to bottom out. There's still nothing to do because we don't know if it's just resting before it makes a new leg lower. But then notice it began to take off from its lows and formed a cup and handle pattern. There was also a gap in there in the direction of the trend. It really began to accelerate higher and then pulls back. This one ran over 500%. That pattern, that pullback pattern, is a first thrust. And it's also a bit of a bow tie. It's a little sloppy because the moving averages didn't all come together over a very short period of time, but it did flip. They did flip from downtrend proper order to uptrend proper order to complete the pattern. Number 5, I will be patient. And believe me, the waiting is the hardest part. Like I said earlier, you're either waiting for something to move, you're waiting for the initial profit target to get hit, and sometimes, unfortunately, you're waiting to get stopped out. Now, there's 3 forms of patience, again, and I can't beat the dead horse on this enough. The patience to wait for your pitch, the patience to wait for a setup to trigger, we just touched upon that, and the patience to wait for a position to move. Now let's talk about the patience for waiting for your pitch. I never could figure out why do the same people who strive for perfection in life, and I have the privilege of working with a lot of successful people, doctors, lawyers, automatic transmission mechanics, dog trainers, or at least one dog trainer, and quite a few other people out there who are very accomplished in their representative fields. But one thing I could never understand is why do some of these same people who strive for such perfection in life settle for such mediocrity in markets? And I used to say this and quite often in presentations and never thinking I'd ever get an answer. Then one day, one of my clients who's a psychiatrist, he says, hey, you know what? I think I can answer the question about why highly trained and skilled professionals can't seem to get the chart reading / trading thing. I'm a physician who specializes in psychiatry. Doctors, lawyers, and mechanics are trained to fix whatever or take whatever train wreck comes along and fix it. We are expected to do something immediately regardless of the conditions and despite the possible negative outcomes of our action. As a physician, if you dwell too much on the potential negative outcomes, you will become a deer in the headlights and not be able to function. So we tend to minimize the negative aspects of situations. I've talked about this particular quote from this doctor many, many times, and one of my other doctor clients sent me a picture and he goes, this is what I'm dealing with this morning, and it was this gross, I'm not going to show it to you because it's gross, but it was this gross sore on a woman's leg that started from her foot and went up almost the entire leg. And this thing was just disgusting, right? It could probably go on like Dr. Pimple Popple or whatever. And he had to deal with it. If he began to operate on her, he could cause a horrible infection, which might kill her. If he didn't operate on her, she would obviously die anyway. So he couldn't become a deer in headlights. He couldn't think about the negative outcomes. He had to think about what had to be done to save this lady's life, even though it would put her, that action in and of itself would put her in danger. So waiting for the perfect pitch is not what we are trained to do. I had a old Crown Vic I was keeping running for my first daughter, and when it came time to give them a second daughter, I kept it running for a little while longer, and I would do a lot of the work myself. I kind of like doing that kind of mechanic work, especially if it's something easy to work on like that. But then every now and then I get over my head, I'd bring it to my mechanic, and he would take care of it for me. And then one day he was like, no mas. He says, it's time for you to let go of it, because he was sick of working on it. And he told me a story of his brother-in-law or his cousin, I think it was his cousin, had an old car, and it just was a piece of crap. And he was so sick of working on it, he says he never wants to see it again. And his brother-in-law said, well, or his cousin, whatever, he says, I'm going to sell it. So he says, you mind if I leave it in your parking lot to sell it? So he brings it to the parking lot, puts a for sale sign on it, and the guy comes in and gives the mechanic the money, and they exchange the paperwork or whatever. And then the guy drove out the parking lot, rode around the block, and came back in, dropped it off, and gave him a list of things that he wanted fixed. So you're not going to be a mechanic very long if you only want to work on cars that really aren't that broken, okay? So waiting for the perfect pitch is not what we are trained to do. We have no training to prepare us for situations where we are sitting on our hands and waiting. It is simply not part of the mindset, and that's Dr. J. And I was very thankful to Dr. J for giving this to me, because it answers a lot of questions. Now, the other patience is the patience to wait for a setup to trigger. And I think I've kind of beat the dead horse on that one quite a bit. So here's one from a while back, day 1, day 2, day 3, day 4. And then finally, 5 or 6 days after I recommended it, this stock triggered. And I nearly forgot about this one. And I noticed I think it was in the Facebook group, one of my clients pointed out that the stock had triggered. And I'm like, holy moly, it did. And I'd almost forgotten about it, because for a week, it did not look like it was going to trigger. And this thing really, really took off. It ran like 30 or 40 points overnight. Here's another one that I nearly missed. I know I'm admitting a lot of guilt today, right? It was a buy on this day, and 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 this day. You could see almost 2 weeks. And then, bam, as soon as you forget about it, forget to put your order in, not follow your plan, it begins to take off. And it ran 60%, over 60% in one day. And then, of course, the patience to wait for a move. This is the AUI I mentioned earlier. We talked about this one last year and maybe the year before. It just went sideways forever, and then eventually, thank goodness, it did take off. But it never did hit the protective stop during that time, so there was nothing to do. And I'd be willing to bet 95% of my clients probably exited that trade long before it eventually took off. Now, you should look for perfection. That's a big flaw. If you're successful in life, in your career outside of trading, you are trained to take whatever train wreck comes along, as we just talked about. But you have to accept once you go in and pick the best setups going in, look for that perfection going in, and accept what happens after you get in. Let the chips fall where they may. Now, here was a mic drop moment for me. And I posted it on Facebook. So I woke up with an epiphany. Trading is so effing easy when I wait for the best setups, take them, and then follow my plan. I think I might write that down. And sometimes it could be that simple. Number 6, I would do my homework, leaving no stone unturned. After the market closes, there's a lot of work to be done. I spend several hours, depending on conditions, and maybe I can get it down a little bit shorter than that. But I do spend a considerable amount of time looking at a lot of charts. I look at roughly 2,000 charts every day. And then I look at sectors, the dollar, and possibly other commodities, gold. And this is the looking at a lot of charts. I run some very loose parameter scans. I just ran them earlier, and they produced for today 2,400 charts. So after the close, I'm going to rerun that and see what comes out. I'll also look at quite a few ETFs. I also look at IPOs, and of course the major indices. So I'm looking at a lot of things to get a feel for what's happening in the overall market. Well, that's all the time I have. I want to thank everyone for watching. You can reach me at davelandry.com/contact. Again, if you want a lot of information, including these slides, my books, and a bunch of other stuff, you can go to davelandry.com/StockCharts. I want to thank everybody for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.